We think women need to talk more openly about money because money really matters. It shouldn't be embarrassing or confusing. Join the conversation. We'll be discussing a whole range of topics which will help you get comfortable with your finances. Money Matters, brought to you by AJ Bell.
Hello and welcome to another episode of the Money Matters podcast, the podcast that aims to help you get to grips with your finances so you can live the life that you really want to live. Joining me as ever is Laura Suter. Hi, Laura.
Hi there. So yes, one goal that strikes a chord with pretty much everyone in this nation obsessed with property is buying your own home, which is often the biggest purchase you will ever make and can take decades to pay off the debt.
Yeah, there's no accident that the phrase "an Englishman in his castle" is used quite a lot. But of course, in order to get that castle, the first step that most of us have to take to get onto the housing ladder is to save for a deposit. And that deposit is likely to be pretty steep. If you're a first-time buyer, though, you might be able to take advantage of the government's mortgage guarantee scheme. It means that lenders can offer you a 95% mortgage on homes up to £570,000 or a flat up to £275,000. But even then, if you're talking about an average asking price of £365,000 at the moment, then you need to save over £18,000 for the deposit. You can't use the scheme I was just talking about for new builds, and it is due to come to an end at the end of the year.
So another option for first-time buyers who are looking for tips and tricks on how to buy their property faster is the government's Help to Buy Equity Loan Scheme. Now, it's due to end fairly soon, so the clock is ticking on this one. But it basically allows people who have a 5% deposit to borrow additional money interest-free from the government. So up to 20% of the property value or up to 40% in London. And they borrow that interest-free for 5 years. And it's a really good boost to help people get onto the housing ladder. There are different limits on the value of the property that you can buy. It varies across regions in the UK. So you need to check those limits first and that you'll be within them. The scheme has been around since 2013, but it does come to an end soon. So the deadline for getting your application in is 6 p.m. on the 31st of October this year to be able to reserve your slot. And that scheme is for new builds.
And just in case you are listening to this in the dim and distant future, this year is 2022 and we are talking in August. There are another couple of options of things that you might be eligible for, including the First Home Scheme and shared ownership as well. You can find those details on the government website. And of course, we're all waiting to find out who the new Prime Minister will be, just a couple of weeks to go. So it is worth keeping an eye on whether or not any further schemes to help people get on the housing ladder are introduced.
Now, if we get to the nitty-gritty of savings, there are also a few government schemes that can help you boost your deposit and so get to that sum quicker. We'll get into some of the comparisons and the detail of them later on, but one of the main ones that's still open is the Lifetime ISA, and that's where the government gives you a 25% bonus on any money you pay into an account. You can pay in up to £4,000 a year, and then the government will add £1,000 to that. It has to be used for your first home, but it's a great option for first-time buyers who really want to supercharge their deposit savings. But if you want more tips on saving for your deposit, we're going to be hearing later on from Claire Seal of My Frugal Year on some tips on how to really build up that deposit fund.
Yeah, and with the Lifetime ISA, free money. Who doesn't like free money? One person who knows exactly how it all works is our colleague Emma Keywood, who works on our Doddle platform. She recently moved into a new home and told me all about her savings journey. You were actually fairly young comparatively when you jumped on that housing ladder. How did that come about?
So I was only 27, and I think that's because I was quite a sensible youngster. when I was at uni, so sort of around 2021, the Help to Buy ISA came out, and I was fortunate enough, I was already working at AJ Bell's, and I was living at home with my dad. So actually my outgoings at uni weren't that much, and I was earning sort of a proper salary as well. So I managed to put a fair chunk aside into my Help to Buy, and I made sure, I think at the time it was around £200 that you could put in a month to the Help to Buy ISA. So I made sure I did that for as long as I possibly could. Life then got in the way, once I started renting and having other expenses, stuff like that. I didn't save as much, didn't beat myself up about that. Was just like, okay, I'll try. And when I could, I popped a bit more in. And then when the Lifetime ISA came out onto the market, I was, again, because I think I was working within the industry, I was quite aware of it. So I moved my Help to Buy ISA over to a Lifetime ISA, which then meant that I could invest in stocks and shares. So I bought a couple of funds, sort of mainly kind of multi-asset funds that at least if I wasn't necessarily topping it up because maybe I wanted to go on a nice holiday, they were growing. They were sort of growing over that sort of period of about 5 years. And then once I got to the point where I was like, right, okay, we're going to do this. We're going to buy a house. I moved some more money as well from a stocks and shares ISA that I had into my Lifetime ISA. So then I was making the most of the bonus. So where I was getting up to £1,000 a year in government bonus as well, that really topped it up. So basically I just tried to take advantage of everything that I could to make sure that I got a deposit together over that time. But yeah, it did sort of take a fair chunk of time to build up.
So you're not a typical young house buyer by any stretch of the imagination. Did you have friends at the time that you were talking to about Help to Buy ISA, about, saving for a house? What did they think about what you were doing?
I think when I sort of did the Help to Buy ISA, that was quite unusual, and no one really cared. They were all off at uni doing Freshers Week and stuff. But as I got older, so sort of between the age, I think basically once we all turned 25, I think everyone's collective attention starts to go towards that. So, two of my closest friends bought a house at the same time as well, and definitely colleagues here as well of a sort of similar age bracket were buying a house. And I think you do start to feel that everyone's on that kind of track a little bit more. But I was definitely the one that was going, right, okay, everyone, Lifetime ISAs, let's use the government bonus, get the free money. But everyone had different situations. Some people had, more help from their parents, like we all know about the bank of mum and dad. I didn't really have that. So I was much more like looking at how I can be savvy. Some people were a bit luckier.
See, when you talk about the bank of mum and dad, that sends chills through me because I've got 2 teenagers. Thankfully, no, not quite at university yet, but I know it's coming and I can see those sort of steps. And I'm thinking, the bank of mum and dad, no, it's closed. It doesn't exist.
I think quite a lot of people as well. I think there's a bit of a change really with my generation, finding that people's are inheriting more from grandparents and that kind of generation, because maybe our parents are a bit more set. And actually that money is a bit more used for that younger generation to get us onto the housing ladder. So that's been something that I've definitely noticed amongst sort of peers.
So if you hadn't had that savings cushion, if you hadn't started early, could you have bought a house now, or would you still be trying to juggle rent and everything?
I think I probably would still be, juggling. I think I absolutely don't believe in the okay, if you stop having your avocado toast, you're going to be able to buy a house. But obviously I could have made lifestyle adjustments. Like my partner and I, we did rent a 2-bedroom house before we bought, because we wanted that space because we were working from home in a pandemic and we wanted a garden. There could have been sacrifices that we made there. We could have lived in a flat. We could have saved money in that way. You can always sacrifice the holidays, though we did 2 years of that. So I'm not sure that's something I want to give up at this point. So I think we probably would have been a few years away still.
So when you finally thought, okay, we've got enough money, it's time to think about buying a house, what were those steps like? How did it all work for you?
So we went to the pub and we wrote a list of all the things we needed to do. And the first thing was to find a mortgage broker. So we went through a recommendation from a friend, sort of who'd already used this mortgage broker, and went through the steps with them. They were really supportive, kind of took us through all of our finances, looking at our outgoings, any debt, any sort of issues that might come up as part of like our jobs or anything like that, like how long we've been at our companies, etc. To then kind of give us an illustration of how much we could potentially borrow. And then adding that to our deposit, we're like, right, okay, well, that's our budget. That's what we need to start looking at. We did then get an agreement in principle as well, because most estate agents now, like, they won't let you view a property without having that agreement in principle in place. They want you to be like, yeah, we know that you're going to be able to borrow this money, and be sort of serious. So that was a bit painful because it was only valid for 30 days. So actually you kind of keep having to do it. And that, was a bit of a worry with like affecting our credit scores. So we tried to balance that and make sure that we were kind of doing viewings as quickly as we could, etc. And then, that's the fun bit, is going around and nosing at other people's houses, and getting started looking on Rightmove, saving them all on the app, and going and having a look around. And I think you quickly start to get a feel for like, right, this is what we want. Things that I think, especially as a first-time buyer, you might not think of as an issue. There was one house that we viewed that had access through the garden, like between your kitchen window and your garden, there was like a pathway for everyone to use their bins in and out. And we were like, oh, absolutely, we don't want that. You don't want someone walking past with their bins while you're doing the washing up. So you start to get like no, I can't live with that. I can live with that. And balancing that up again with the budget, and you quickly start to go, not sure this is worth this much compared to what I've seen elsewhere. You've become a bit of you think you're like want to be a estate agent, but I think you have to be quite discerning on what's actually worth it and what's worth it to you, and what you prioritise.
So you found the house that worked.
We found 3 houses that worked and offered on 3 different houses before we found our final house, because we were looking in December last year, sort of November, December time, and it was very competitive. So we had 2 houses that went for massively over asking price. So we were just outbid. And we had another house that we offered on, but the seller was a bit worried that we didn't have as high a deposit as other places, because there were some people not getting mortgages, which was something that we were surprised to encounter, and is quite unusual. But it was definitely one of those markets, and I think it's kind of quietened down now, judging by his friends who are estate agents and stuff, that you were offering but not necessarily guaranteed getting a place. But luckily, the place that we now have came back onto the market after it had already been offered on, and we'd had like our viewing cancelled. So it came back on the market, and we found it. And I think we offered within sort of 12 hours. We were like, right, no, this is it, and we're going to do it. And luckily that did get accepted, I think the 23rd of December. So a Christmas present.
So once it was accepted, what was the process like of being able to use your LISA?
So with a LISA, it all goes through your solicitor, so that it's not sort of charged as a withdrawal, which means that your solicitor kind of needs to be quite savvy on lifetime ISAs. And that was a challenge that we definitely found, that they've been on the market for a few years now, but maybe they haven't been as well publicised. And we really found that our solicitor was quite confused by the process. And in the end, I actually had to send her the forms because I had them through work, and because she'd sent us Help to Buy forms. I think, there are a lot of ISAs on the market. And yeah, there was a little bit of confusion there. But once we got past that, we had both, myself and my partner had licenses with different providers. I had mine with AJ Bell. So that was fairly smooth, as long as if you did have a stocks and shares lifetime ISA, you sell your investments first. That's fairly quick once they've done all their checks. And my partner actually was with Moneybox, as he had a cash ISA because he started to save a bit after me, so didn't want to take that risk on the stocks and shares. And they were really slick, very automated processes, and really good communication as well. So overall positive once we got past those kind of solicitor hurdles. And hopefully that just means it won't happen for the next person that works with that solicitor firm.
And in terms of how much you'd managed to save, what sort of amount did you have to be able to offset the cost of the place? Because it's not cheap to buy in London.
No, so we actually bought just outside of London for that very reason. And we actually started by looking in Royal Tunbridge Wells, and quickly decided that also was a little bit more expensive than we hoped for. So we moved just outside there. So we actually took advantage. Again, I'd heard that after the pandemic, the government were supporting bringing back 5% deposit mortgages, so 95% mortgages. So I really wanted us to take advantage of that and just get on the housing ladder. So we only actually had a 7% mortgage on a nearly £400,000 house, which means that our mortgage bills are quite high as a percentage of our monthly income. But again, it very much depends on everyone's circumstances. I've got friends who, had a much higher deposit, but they've got a smaller house and their mortgage payments are lower. It really depends. And obviously with interest rates as well, we moved quite quickly on the interest rate that we got so that it was a bit lower. We were fortunate on, again, those that government-backed mortgages coming back as well.
So when you were able to get the key and to walk into your new house and the boxes are there to you start to unpack, how did that feel?
I mean, obviously it was amazing and it was very emotional and a big step forward in my life. It's also incredibly daunting, and I don't think anyone necessarily warned you about that it's like, right, this house is now my responsibility. If something goes wrong, I have to deal with that. And we definitely had that problem. We had, an issue with some plumbing, turned out absolutely not to be an issue and was just our own stupidity. But you have to deal with that. You don't have a landlord anymore. But then on the flip side, it's also really fun to be able to go, this past weekend, we painted the front of our house sage green because we can. And everyone else is on the road is white, but it's our house and we own it, so we can do that. So that's been really great. Only downside of that is that things are really expensive. So that's, again, a shock. Curtains and blinds, always budget more for that than you think. Paint is insane at the moment. We haven't done anything that requires any wood because wood is so expensive. The only things we've done is try to salvage where the previous people had shelves or something that we didn't want. We've taken those shelves and tried to turn them into something else because we don't want to buy anything wood. So lots of things to get carried away with. And I think it's okay. It's your first house. It's fun to get excited about it all.
Well, look, Emma, thank you so much for sharing your journey and congratulations on being
Danni.
a homeowner.
Thank you. I'll speak to you soon.
Emma, Keywood really messing up the curve for all first-time buyers. I certainly wasn't anywhere near as switched on when I was starting out on my house building journey, but something tells me, Laura, you probably were.
No, I don't think I actually was. I think I just rented for a really long time and just tried to build up savings. And I think just as my salary rose, I was able to squirrel away a bit more. But I'm also a very typical example of someone who had some family money to help them buy their first home, which I think is something that we see so often. And Claire Seal, later, our other guest, will talk a bit about how we all need to acknowledge some of these privileges. So whether that's getting some family money, getting inheritance, or being able to kind of supercharge your earnings. A lot of these are reasons why people manage to get on the housing ladder younger. And I think sometimes it's a bit dispiriting if we don't acknowledge that for the people that don't have the benefit of those things.
And I was very lucky because even though I didn't have any of that, I bought my house a lot of years ago at a time when I could get a 100% mortgage, and the cost of my house was not massive at all. I mean, it was nowhere near the current average asking price. Laura, I'm going to ask you now to put your AJ Bell head of personal finance hat on and just to talk me through some of the nitty-gritty of lifetime ISAs, and even though I know you can't get them anymore, Help to Buy ISAs.
Yeah, so both of these are really great schemes if you're saving for a deposit to buy your first home. So if you don't already have a Help to Buy ISA, like you say, that's now closed to new entrants. So let's cover lifetime ISAs first because they're still open. So you have to be between the ages of 18 and 40 to be able to open one. You have to be using it for your first home. So you can't have already, for example, inherited a home or even bought kind of an investment property with someone else or have any share in a home already to be able to use it. You can put in £4,000 a year, as I mentioned earlier, and the government will top it up, any contributions you make, by 25%. That £4,000 counts as part of your usual ISA allowance, so that £20,000 ISA allowance. So that's something to just be aware of. But essentially, you can't beat that uplift that the government's going to get you. No other savings account is going to offer you that boost to your deposit that the government will give you with the lifetime ISA. A few other things to cover. You can have a cash version of it, or you can have an investment option, and we'll come on to kind of the pros and cons of them later. If you're buying with someone else, then you can each have it. You can't have a joint lifetime ISA, but you can each have one of the accounts, which means you can get up to £2,000 a year towards your joint deposit. But there are a few tricky bits that you need to be aware of. So there's a property limit of £450,000. Now, obviously, for lots of people, that's going to be ample and that's plenty, and they're not going to be looking to buy a property worth more than that as their first property. However, in some more expensive areas, you might come up against that limit, particularly if you're buying with someone else or you're buying your first property a bit later on and you're kind of skipping that initial small flat stage and going straight to a larger property. Like I mentioned before, you must be a first-time buyer. And one of the little technical things that sometimes catches people out is that you need to have the lifetime ISA account open for a year before you can use it to buy a property. So if you know that you're going to be buying in the next year and you think this sounds like a good idea, you need to weigh up whether you can wait that full 12 months before you use it, or whether you want to buy in the next year, in which case it's not for you. So the crucial thing that you need to bear in mind is that there is an exit charge if you want to take the money out for any other reason other than buying that first property. Or there's kind of a secondary use for the account, which is saving for retirement, but we won't go into that. So if you decide that you wanted to dip into that savings pot, then you would pay an exit fee to get that money back. And it's effectively the government trying to reclaim that bonus money that they've given you. But it works out that you end up losing a little bit of the original money that you put in. So you just need to be aware that it's not an easy access savings account where you can dip into it if times are a bit tough. It's really should be viewed as money saved for your deposit and only for your deposit.
Okay, but what about a Help to Buy ISA? Because some people might still have one of those.
Yeah, so these closed to new customers a few years ago, but you can still have the account if you'd previously opened one. It works out in a really similar way. The government gives you a similar percentage top up, but you can pay in much less, and it's a monthly payment that you can put in. Where the lifetime ISA is really flexible, you could put all £4,000 in at the start of the tax year, or you could drip feed it in each month. The Help to Buy ISA, you have to pay an amount of money in each month, and then the government tops that up, and it's a lower total amount each year. It also has different limits. So the property limit is £250,000 outside of London and £450,000 inside London. And so if you're buying in some of those more expensive areas outside of London, then you might find that that property limit is too low. And frustratingly, it's not been increased since the product was launched a number of years ago. So it might be that you've got a Help to Buy ISA account open and you think that you could benefit from moving to a lifetime ISA, which you can do. You can transfer in to that lifetime ISA, benefit from that higher property limit outside of London and the higher contribution, and so government bonus. But you just need to be aware that any transfers will count towards that £4,000 annual lifetime ISA limit. So if you've got much more than £4,000 sitting in your Help to Buy ISA, you're going to have to transfer it over a couple of tax years. So it's just weighing up whether that's worth it. You just need to think about how long it's going to be until you buy a property, how long it will take you to transfer over that money, and whether you'll kind of benefit from additional government bonus from doing that. It's just one final point on it is you can have both accounts open at the same time, but you can only claim the government bonus on one. So if you've got a Help to Buy ISA open already and you've subsequently opened a lifetime ISA, you'll only be able to claim the government bonus and use that money for a deposit for one.
It sounds incredibly complicated, but we know that when you have enough money to buy that house finally, it is all worth it. Just thinking about the different kind of investments really briefly, Laura, that you can hold in some of these, because you can choose cash or qualifying investments. Most people will know stocks and shares. So how do you know which one's right for you?
Yeah, and I think this is like a tricky issue because at the moment you're not really getting much interest on cash. There's been a big increase in what savings accounts are paying at the moment, but you're still not really getting a great return. What here you need to think about timescales. So if you know that you're not going to buy your property for kind of 5 years or more, then I think it's a good idea to think about investing. That's kind of the minimum period we usually say for investing. And that means that you can ride out some of the ups and downs of investment markets. If you know that you're going to be buying within the next 5 years, then it's probably better to stick to cash, but make sure that you're getting the best interest rate that you can. And when it comes to cash, if you know that this is a kind of longer term thing, so say you think that you'll have enough money in about 2 or 3 years' time, you could look to boost that cash return by doing things like getting a fixed rate account or getting a notice account, which offers you slightly higher interest, but it means you either can't access that money for a certain period or you have to give a certain amount of notice before you can withdraw that money. Now, you can do that with things like a house deposit savings because you know that it's a longer term thing. It's not money that you're going to want to dip into month in, month out. If you do know that it's going to be longer term and you're not realistically going to buy for kind of 5-10 years, then investing can be a really good option to boost your returns because effectively the higher return you get on the money, the fewer years you have to save and the sooner you can get on that property ladder.
Yeah, because in the end, it really is all about making what you've got stretch to cover all of your day-to-day needs. I'm just thinking at the moment about, trying to find a way to save because it's so hard with inflation the way it is. And to try and, pay for that day-to-day and try and save for your dream, it's not easy, particularly at the moment.
And someone who knows all about the challenges of that is Claire Seals. So she started the Instagram account My Frugal Year to anonymously document her journey out of £27,000 of debt. And the Instagram account really took off. She has since revealed her true identity. She's gone on to write 3 books, including Real Life Money, An Honest Guide to Taking Control of Your Finances. But now, having paid off all of that debt, her, along with her partner and their 2 sons, have bought a house. And so we talked to her about how she went from debt to deposit. So Claire, thanks a lot for joining us. You kind of documented your journey out of debt to your, I think it's 88,000 Instagram followers now. But talk us how you went through the process of coming out of debt and then saving for a deposit for a house.
Yeah, so I mean, it's taken a little while. It's been 3.5 years since I first set up my account, a lot of which has been in a pandemic. So it's felt like a really strange sort of time anyway, but my life has kind of changed beyond recognition, really. And I don't really even know why I set up the account in the first place. I feel like it's quite popular now to kind of document journeys on social media, but at the time there weren't very many people doing it about money, but it was really important. It became really important for me. It became a really important sort of motivator and something that kept me accountable. And then it was career changing. So for the first sort of 18 months, 2 years, it was really, it was kind of doing the paying off, learning the lessons, educating myself, kind of finding catharsis in this community, finding out about products and kind of just financial knowledge that could help me, and chipping away at the debt quite slowly to begin with. And during that time, I went self-employed. I was probably earning around £30,000 a year for the first couple of years, doing a variety of different things. And then towards the end of paying off our debt, I kind of published a book and was able to, grow the platform even more. I was able to earn a bit more, which obviously, we channeled that straight into the debt. And were able to pay it off by March 21, which was 2 years almost exactly after I'd started the Instagram account. And then our focus really switched to saving for a house. We in 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 2020, when the pandemic broke out, we had a really horrible experience where our landlords decided to sell up rather than do a bit of maintenance that we'd asked them to do. And so we found ourselves in a situation where we were having to sort of explain to a 5-year-old why he had to leave his house and that we didn't have any control over that. And I think, and then we ended up moving house the day that the first lockdown started, and it was unbelievably stressful. And I think feeling so out of control just really cemented for me and my husband that once this debt is paid off, we are going to put everything that we've got into creating a situation where we can't be thrown out of our home on someone else's whim. And so that was like a natural progression for us. And during that time, kind of both of us had been able to, we were earning more, significantly more. And also kind of our eldest child was in school, our youngest child was getting the kind of 30 hours free childcare, and it sped up our ability to save kind of unbelievably, because we had so much more disposable income. And then we completed on our house mid-June this year, so kind of just over a year after we finished paying off our debt. And I think, I'm realistic about the fact that it might have taken a bit longer than that, or even quite a bit longer than that, had we not both been in a position to earn a significant amount more. And I'm always kind of trying to find a balance when I talk to people about this between, yes, there are lots of things that you can do to improve your financial position and to buy your first home, to pay off debt, but also there are those external factors of how, crucially, how much you earn that will also dictate that.
Yeah, and I think that's really important to acknowledge, because I think some people out there who might be saving and might not have had those additional circumstances. So whether it's an increase in your salary that was kind of unexpected, or whether it's like a sudden windfall of money through a bonus at work or some family money. I think if people were out there trying to save and they didn't realize that people had that because people didn't talk about it, it would seem quite dispiriting, because they would think everyone's kind of overtaking me in this saving for a deposit. So I think that is really crucial to acknowledge, isn't it? That people's life circumstances can be so different, and that has a big impact on how much you can save.
Definitely, and can change very quickly in one direction or the other as well. So, we've got kind of on the one hand, you might have a windfall or a sudden increase in salary. On the other hand, you might have a redundancy or an illness, and it can all change really quickly. But I think one of the things I'm always quite keen to point out is, there's a big culture actually on social media and particularly on Instagram for the last few years of sharing, that amazing first kind of like key in the door moment when you buy your first home. But nobody is saying, thanks, Grandad, for the 70 grand you gave me. No one's saying that part. And so when we bought our house, especially because I'd been so transparent all along, I was very, very clear that it was not like a gifted windfall in my case. It was the fact that having a platform allows you to command a higher income, and but also crucially, it's also still very easy to allow lifestyle creep to eat away at that. And that for us, it was a combination of that and then knowing what to do with that money rather than just allowing it to kind of disappear on the miscellaneous things. Like, we all know how easy that is.
Yeah, it's so easy that when you get that little pay rise, rather than living to the same style that you were previously, you go for a slightly more expensive restaurant when you go for a meal out, or you buy clothes in a bit more of an expensive shop. And those things kind of add up until you realize 5 years down the line that your life is actually quite dramatically different to how it was previously. But I guess also a lot of the tips and tricks and habits that you learn from paying off debt translates so well into saving. So rather than funneling that money towards credit cards and overdrafts, you were instead funneling it into a savings account.
Definitely. And I think it felt even more like a sort of blessing to be able to do that, because we were used to kind of using that money to fill a hole, and now we were using it to build something. And the habits are the same, but I think there is like still a mindset shift. And I think if you're used to not really having like a positive net worth, or not using your money to grow something or to build security, it can be really hard to feel like that's something that you're allowed to do or something that you deserve. So there was definitely had to be sort of a mindset shift. I know quite a lot of people who've done the paying off the debt and got all the brilliant habits and the brilliant knowledge, but then when it comes to channeling that money into building something, there's like a bit of a block there. And I think you have to be quite careful not to fall down that route as well, of kind of, I've got all of this disposable income now. And some people don't feel comfortable having money. I know a lot of people, my mother is like it, of kind of, they don't really feel like they deserve it. So as soon as there's some money in their bank account, they have to get rid of it. And I'm aware of that tendency in me. And so what I did was kind of channeled it all immediately into a savings account. So it wasn't sitting somewhere where I had to make a decision about what to do with it. And it wasn't sort of there to be spent. It was out of my way almost, but it was there kind of, slowly building up to enable us to buy a house.
And so you talk about some of those kind of psychological barriers in a way. Was there not an element when you paid off all of that debt finally that you just wanted to splurge and reward yourself and kind of say, oh, we'll allow ourselves a couple of months off and we'll just enjoy it? Was there not, and did you have to fight that urge? Or?
Definitely. And I think that isn't necessarily like a bad thing to give into. Sometimes, like I work in like a coaching capacity. I work with quite a lot of people in different circumstances, and so a lot of people who have a significant amount of debt to pay off, they're already homeowners, and other things in their life are kind of already fine. And so I think sometimes not everyone has like a sort of designated next step in the process. And so I think under those circumstances, as long as you're not falling back into the habits that kind of got you into a difficult situation to start with, it's okay to kind of, reallocate some of that money to enjoying yourself. And like, I really passionately believe that it's important to enjoy the money that you earn, as well as kind of shoring up your future, because you really can't take it with you. So, I think that kind of extreme frugality for life can really affect people's well-being in a negative way as well. But I think we definitely set aside more money to enjoy ourselves, and kind of specifically because for the last sort of 9 years since we've been together, all of my husband's salary has gone towards supporting our household and our children, and he was always the kind of breadwinner, and working really hard. And so it was important to me that kind of, now that I was earning on a par with him, and now that not everything was spoken for, that actually each of us got some money that we decided what to do with ourselves, and that it wasn't all for the family, that we each get to keep a bit of what we've earned now. So I think as long as you do it on purpose, and it's not just falling back into habits, into old habits, or having like a sort of screw it couple of months where maybe you undo some of that good work, then it's okay to, it is a massive achievement to have paid off kind of any sum of debt. And I think, it's a really tricky balance between not sliding back into carelessness, but also not holding on to all of that anxiety that you do feel when you're struggling with debt. So I think always what I'd say to people is kind of, whatever you do with your money, just do it on purpose.
And so for people that are saving for their first home now, whether that's coming from a background of having been in debt, or whether it's just starting from a kind of neutral point of view, what tips did you learn through paying off your debt and through saving that you think would really help people kind of boost their savings or focus their savings?
So I think the first thing really is to treat your savings like a bill. So that's something that really helped me. I am, I'm not particularly good at keeping on top of life admin type things. Like, I have ADHD, and I find it quite hard to stay on track of stuff like that. But if you set it up like a standing order, to a savings account, and treat it like another bill, it's like a non-negotiable, that I find that really helpful. And I know quite a lot of other like neurodivergent people do, and also just people who are like busy. So treat it like another bill, and automate everything that you can as well. So whether that is a standing order, or whether you're using a savings account that has like an auto saving feature, so like roundups, or saving apps that take a little bit of money every few days, is like a really good thing to do, because it's not really adding to your mental load or your busy life, but it is kind of, it is allowing you to save. I'd also say definitely look into any of the schemes, the government schemes that might help. So, whether it's Help to Buy, shared ownership, there are lots of ways to kind of get a real foothold on the property ladder without necessarily having to have huge amounts of money. And again, like, there are some really good tools out there to help you to look at what you think you might be able to afford. You don't have to try and get onto the property ladder at rung 6. It might be that you start with something a little bit smaller, or something that's not quite in the perfect location. And then you kind of, change things as you get older, and as you progress in your career, maybe, or as your circumstances change. But yeah, I think having a plan and having an idea of what it is that you want, what you're looking for, and then automating as much as possible to follow that plan is really sort of a great way to do things, kind of having both sides of that.
And you talked a bit in your kind of journey out of debt, you talked a bit about how to talk to other people about that. So whether that's your partner and kind of acknowledging that debt in the first place, or whether it's talking to family. Lots of people now obviously buy with family members or with friends or with partners, because that's a much easier way to get on the property ladder than trying to do it solo. So how should people go about talking about that kind of saving process, and involves merging finances in a way that people might not have done before? So how do people navigate that?
I think talking about money is something that, is just still really hard. It's one of those subjects that's almost always uncomfortable. It often doesn't matter. It can be people that you're very intimate with in other ways, whether it's a partner or whether it's your best friend since you were tiny, and you know everything else about each other, but you might not even know each other's salaries. But I would say normally, if you can be brave enough to be the first person to raise the topic, you'll be very pleasantly surprised by how ready other people are to open up as well. So, I think being on the same page financially as your partner is absolutely crucial. My husband and I really danced around it for a long time, because we'd been friends for a really long time, but we got together and 3 months later I was pregnant. And so we had been making it from one day to the next, getting to know each other kind of as partners and how we worked as a family alongside that. And we didn't really do any of it deliberately. We didn't do it on purpose. We kind of fell into the way that we managed our money. So when I started posting about it online, it became easier to talk to him about it. And I would say also, if there's something difficult that you don't want to discuss directly with your partner, maybe don't make an Instagram account, but writing it down can really help. So because it gives you a chance to kind of put everything out there without, being interrupted, or without worrying that you're going to forget what you're going to say. But once we were able to get on the same page and figure out a structure, like a financial structure for our family that worked, it's just been so much easier, and it makes communicating about those smaller things that do come up when you live with someone where you share finances just so much easier, because we have this kind of foundation understanding. But I think another thing to kind of just consider is that not everyone's got their own kind of map of the world when it comes to money, and not everyone has the same education. Not everyone has the same opinions about it. Not everyone has the same financial privilege. And so when you're talking to kind of friends or family, especially if they're of other generations, kind of almost going into the conversations not really expecting to necessarily be on the same page, and being open to finding a middle ground is really important.
And when lots of people save to buy their first home, they just think about the deposit. They think, okay, I need to get X amount of money together to be able to buy the type of home that I want. But obviously, I know from experience of buying somewhere, there's so many other kind of hidden and additional costs. Did you discover that when you bought, and how can people budget for those?
So we did discover that, and I think obviously working in the area that I work in, I had probably more of an awareness of those things going into it than a lot of other people do. But I mean, I think the main thing is really stamp duty, and there's obviously the first time buyer discount on that, and also there is a threshold under which you don't pay stamp duty, but it desperately needs reviewing, just because house prices have skyrocketed so much and that threshold hasn't shifted. So houses that would, A, the house actually is more expensive, but B, people are having to pay stamp duty on houses that they wouldn't have had to before, especially kind of starter homes. And so, yeah, I think when you sit down and kind of make your plan for saving your deposit, definitely also research what other fees you're likely to be to pay, and some of them are sort of optional, like, so you can go with a mortgage broker where you have to pay a fee, but lots of brokers don't charge a fee because they just charge a fee from they charge their fee to the lender. So looking into all of those costs and how you might be able to reduce or avoid them when you make your plan, I think is a really great thing to do, because the last thing that you want to do is be in a position where you think that you can afford to buy a house, and then all of a sudden you realize there's £7,500 stamp duty that's going to be due, and you're not going to be able to pay it by completion. There's also the deadline by which you have to pay it has been shortened. So it used to be that it was 30 days after you moved in, which, for some people might give them the grace period that they need, but now it's 14 days. So there's all kinds of things to consider, and I would suggest sitting down and having like an afternoon, especially if there's two of you doing it together, where you do all of this research and you kind of factor it into your plan.
And the cost of living crisis at the moment means that lots of people who were kind of on a path to save for a deposit are now going to struggle to make those savings each month because the cost of everything else is rising by so much. So what tips would you have for those people that are maybe focused on that goal of their first home but struggling a bit at the moment?
So the first thing that I would say is it all depends on kind of your timeframes. So if you were hoping to be looking at buying a house within the next couple of years, but you now think it's going to be more like 5 to 7 years, it might be worth looking at either locking that money away in a savings account with a higher return in interest, because quite often if you lock your money away for kind of 2, 3, 5 years, you'll get a better interest rate, or looking at investing it perhaps, where you might get a better return on that, but obviously loads of research needed there, and potentially consulting a financial advisor, but the main thing that I would say is just to try not to give up. It can be really disheartening if suddenly the goalposts get moved, and they are being moved again and again by this cost of living crisis and just the geopolitical kind of situation in general. But it's worse, I think, if you give up and then you have an opportunity in future to buy and you've kind of squandered it through being a bit sort of apathetic or discouraged. So what I would say is, when you're staring down the barrel of something that's like a big goal that's going to take a long time and maybe longer than you thought it would, it's just that time will pass anyway. So whether it's 2 years or 3 years or 5 years, no matter what you do within that time, it's going to pass anyway. So just keep chipping away. If you have to reduce the amount that you're saving each month for a while to kind of soak up those extra costs, then do that, but maybe try and still like ring fence a small amount that you save every month so that you stay in the habit. And just, sometimes you do just have to slow down or take a bit of a pause, but try not to go backwards.
Amazing. Thank you so much for sharing all of that. It was really interesting.
Thank you so much, Laura.
Laura, Claire's story is just so inspiring. And as you said earlier, you can find Claire on Instagram at MyFrugalYear. And hopefully she has definitely given you some inspiration as well. And in Emma's case, hopefully she's kind of shown you the way it can be done. If you think ahead, do check out at Doddle app on Instagram as well. If for no other reason, then it's got some really cool monsters on it, but it's also got a range of investments like lices.
And our next episode will continue along this path, but it will give you everything you need to know about buying a house. So everything from mortgages to putting yourself in the best position with estate agents.
yes, we'll have to leave it to you to find the curtains and sort the moving truck bits out, but hopefully it will have everything else. As always, we've got loads of articles on house buyings, including one on lices that Laura has written, in case you couldn't jot everything down as she was speaking. There's also lots of tips on there for things like saving for kids, asking for a pay rise, and starting your investment journey.
And don't forget, we always like to hear from you, so do get in touch via Instagram. We're at AJ Bell Money Matters, or you can email us moneymatters@ajbell.co.uk. And thanks for listening.
Thanks. Bye.
Before you go, please remember this podcast is for educational purposes, and the views expressed don't necessarily reflect those of AJ Bell. The podcast isn't telling you whether certain investments are suitable or not. And don't forget that the value of investments can change, and you can lose money as well as make it. It's also important to remember that tax rules apply, and that the way an investment performed in the past may not be the same as how it behaves in the future. If you want help, go see a qualified financial advisor.